What happened here on the 10th of October was much more consequential than most people think. This is the altcoin market cap. It crashed massively because of the perpetual futures, the levered bets on the price. Subsequently, prices at least partially recovered, but the market structure has changed. On the day, we saw massive liquidations, 16.7 billion across all exchanges. The average altcoin fell by 48%. Some of them fell by much more than that, 60, 70, 80%. Now, perpetual futures are just derivative contracts. They're just contracts, they're just bets on the price. Nobody is buying or selling the asset. And so whenever somebody gets liquidated, somebody else is winning. And it appears as if the market makers were the big winners. So the retail investor lost, they went through the liquidation price. But the hyper liquidity provider, for example, it made more than $40 million in a single day. And it took 2 years to make the first $80 million of profit. Now, this profit for the market makers has been very short-lived because the trust in perpetual futures has collapsed since then. People don't want to bet on prices anymore if things can crash so quickly just to then recover. It really looked like a scam wick. Sometimes we saw this in individual assets, but we never saw this across the entire market. Have a look at the amounts of bets on various cryptocurrencies, on Hyperliquid in this case. That peaked at 15.3 billion. Then came the 10th of October. All the longs got liquidated, so we fell below 7 billion of bets. And the recovery is very slow, it's very painful. And who knows when we're going back to 15 billion. Now, why does this matter? It matters because it has an impact on the spot price as well. Whenever somebody bets on an asset, there are arbitrage bots that also trade the spot market at the same time. So more interest on the perpetual futures tends to also translate into higher prices on the spot market. Yes, the hyper liquidity provider made 40 million worth of profit, but the platform lost an entire billion of liquidity. So only 5% of the capital ended up with the market maker. The other 95% were simply the longs losing their capital to the shorts. And those investors are very unlikely to come back anytime soon. Just have a look at how important this market is. It gets way less attention than it should. In decentralized finance, in the largest decentralized finance spot exchange, we had $2.1 billion worth of trading volume in the last 24 hours. Compare this with the centralized spot exchanges. Here we had 22 billion. And compare this with the perpetual futures. Here we had 72 billion. So really, most of the trading happens in the derivatives market, even after the massive liquidation event on the 10th of October. Now, why am I saying that the market structure itself has changed? It's because we all have a bias. There are some investors that tend to bet on rising prices most of the time, and there are others that tend to bet on falling prices most of the time. With that liquidation event on the 10th of October, most of the longs lost all their funds and most of that capital moved over to the shorts. Now, since it takes a very long time until the longs can come back again, and since the trust has been eroded by those market participants, it now costs a lot of money to bet on falling prices. There's now much more people left that bet on falling prices than there are people that are willing to bet on rising prices. Or in other words, all the optimists got flushed out of the market. Have a look at the funding rate of XRP. It tended to be quite clearly positive most of the time. Then came the mass liquidation event, and now the funding rate tends to be less positive afterwards. It's still green, but it's less green than before. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. Have a look at Cardano, the exact same development. Have a look at Avalanche. Here we even tend to be in negative funding rates most of the time. But check this out. This is near. Again, we tended to have positive funding rates. There were more longs than shorts in the market. The longs had to pay the shorts in order to bet on rising prices. Now it's the shorts that pay the longs in order to bet on falling prices. But check this out. Polkadot. This is now clearly negative after the shock on the 10th of October. And the negative funding rates are even larger in magnitude than the positive funding rate ever was. Or here, this is Hedera Hashgraph. Or here, this is Aptos. Isn't that fascinating? Now this is true for almost all altcoins. The funding rates across the board have come down. It's now much harder to make money by betting on falling prices. And so because of that, because now it pays money to bet on rising prices of altcoins, we tend to see the remaining market makers that have not gotten liquidated, they tend to now bet on rising prices, and at the same time they buy up the spot supply. So we do see short squeezes every now and then. When we've got negative funding rates like this, when we've got an overhang of shorts, that means short squeezes become more likely. And that is why I believe we see those random alts like Dash and Zcash and ICP and Virtual and Filecoin suddenly rallying. It's especially the altcoins that have a very long-term history of underperformance, like the ones I just mentioned, Starknet as well, that now get pushed the most because they have the most short investors. And so the altcoins with the most consistent underperformance, they seem to be now the most dangerous to short. The market is killing itself. In the last 3 years, we saw the altcoin market cap already underperforming the rest of crypto by 62%. But that's just the view of the market caps, because prices tend to perform even much worse than that. This is the WorldCoin price since inception, and here is the WorldCoin market cap since inception. So the market cap can perform much better than the price because the number of tokens that circulate over time go up. So there are token unlocks, the circulating supply increases over time. So this performance is even underrepresenting how bad the altcoins really performed. This flash crash has completely eroded the trust in the perpetual futures market. And the massive unlocks that we see in the altcoin market, so roughly 1 billion every single week, that has eroded the trust in the spot market. The altcoin market cap barely outperformed technology stocks in the last 7 years. We only see an outperformance of roughly 28%, while at the same time the volatility, so the price risk, is of course much higher for crypto compared to tech stocks. So we're taking on much more risk with crypto, but we don't get adequate compensation for this additional risk. Only marginal outperformance. And that outperformance might turn into negative performance in the not so distant future if we really see a continued sell-off. And again, the volatility of alts is way higher. This is a drop of 87%, this is a drop of 64%, and yet the outperformance is almost non-existent. So the risk of the altcoins, I believe, was not worth it relative to technology stocks in the last 7 to 8 years. One could even make the argument that the same is worse for the riskier part of crypto. Because while we looked at total, so the entire cryptocurrency market cap in this chart, this here is total 3. So it's all the altcoins that are not Bitcoin and Ethereum, and that did underperform in the last 7 years, already by 15%. Even the best of the cryptocurrencies, the crypto that tends to outperform most alts most of the time, Bitcoin, it only had a very meager additional return compared to tech stocks. Really, the very early investors in Bitcoin that bought, say, 10 years ago or 7 to 9 years ago or 5 to 7 years ago, all of those early investors, they are currently offloading. And that's what's depressing the price. Despite all the demand through the ETFs and the treasury companies, Bitcoin cannot outperform, and especially the smaller altcoins, they are struggling the most. Fundamentally, the problem with crypto is that there's no regulation and that everything is fueled by greed. And it's the early investors, it's the venture capitalists that always cash out on the back of the regular investor, on the back of retail. And now we see even the market manipulation with that flash crash in the perpetual futures where everybody got wiped out, and this does have long-term ramifications. And so since funding rates turn sustainably negative everywhere now, I do expect more short squeezes. I do expect selected rallies in individual alts going forward, especially the alts that tended to perform very poorly. Just have a look at this, right? Trump did really poorly since launch. ICP, same thing. Filecoin as well, Starknet. Just have a look at the altcoins that did the worst. those are the most likely to do the best going forward, especially if they've got negative funding rates on the perpetual futures market. This is now a market of the few surviving market makers that still have firepower to bet on rising prices, because it's mainly the pessimists that survived that market crash. There's another case to be made that the altcoins, especially relative to Ethereum, might have at least an intermediate rally, because this is the others market cap relative to the ETH market cap, and historically it traded in a somewhat constant range. And there is potential for an almost 90% outperformance versus Ethereum. Now, I believe most of that outperformance will not be the altcoins doing that well. It will mainly be Ethereum getting sold off, but there will be selected short squeezes. Some altcoins are going to make massive rallies, again, because too many people bet on falling prices. The few people that have survived this crash are the pessimists, and they are now the ones that are getting roasted. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. There's a link to Premium popping up over here as well. Just click on that. This is where I share my own trades. This is where I share how I set myself up in this market environment. Thanks for watching, and see you next time. Cheers.